All right, y'all, listen to me. Credit Karma will do you dirty if you are looking to buy a house. If we haven't met, my name is Chelsea Winstead. I am a mortgage broker and a home financing strategist. Let's talk about why, if you are looking at Credit Karma, it is not giving you an accurate depiction of what someone like me is going to see when we pull your credit. So let's dive into why this happened. Also, the reason I do this every single week, y'all, I swear, I'm like chatting with somebody. They're like, hey, yeah, my credit score is like a 740 and blah, blah, blah. And then we actually look at their scores and they're in like the mid sixes. And then they almost like shit their pants, pardon my French, but they're like, oh my God, what the heck? How can it be so far off? And it's because there's a difference in what we are tracking. Credit Karma uses something called a Vantage score. Okay, so this is used by free consumer apps and it is designed for general credit monitoring, not lending. So what it really focuses on is your most recent activity and trending behavior. It does weigh things like utilization, inquiries, and payment history, but it does this differently than FICO does. Also, it usually is going to give you a way higher score, literally almost every time, than what your real mortgage credit score is going to look like. It is good for things like spotting changes or signs of identity theft, but I'm not joking. The amount of times that people are their flabbers are gasted when I run their scores. So I always start with a soft pull with every single one of my clients, and even that soft pull. So I get 2 of the 3 scores. Also, it's a soft pull, which means that it's not reported to the bureaus, but like most times, very, 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 very rarely. And again, this is specifically for those of you using your credit card. It gives you a credit score. If you have Credit Karma, it tells you these things. It is almost always what I pull way lower than what you were seeing. And again, it's because this is a Vantage score is different and it's tracking behavior and activity. Now on the lending side of things, so FICO is what we use in the mortgage world, and we use 3 specific models in mortgage. So FICO 2 is Experian, FICO 4 is TransUnion, and FICO 5 is Equifax. Now these models are older. So like kind of an argument of like, why don't we use things like Credit Karma? But y'all, I don't make the rules. I just have to follow them. And so they are standardized across the industry. Now, let me tell you what will honestly kick your ass, y'all, is a late payment. Y'all, they don't like late payments. Like depending on the loan type, a late payment within 12 months can actually you can potentially not even get approved for a loan. So the biggest 3 things that we look at on the mortgage side are going to be late payments, and those are big no-nos, collections, and your credit history length. This data is also pulled directly from the 3 credit bureaus, not the consumer versions, which is what a lot of you have access to. And on average, this can be between 30 and 80 points lower than what your Vantage score says.